Okay, just a couple of minutes to go for market opening. Mayuresh Joshi is joining us this morning. Mayuresh, it's policy day, quiet ahead of that. What's your expectation?
Morning, Abha. I think clearly looking at the kind of data points that we've got, the IMT warning and the kind of outlook that the governor had given in the last policy, I think our take is that it will be a status quo this time round. And again, I think my take is instead of a 25 bips cut that the market is expecting, I think if the data points are much better over the next couple of months, you might expect a bigger cut coming through. So I think it's going to be a status quo in our opinion, at least for this policy.
All right, fair enough. I just want to mention what's happening as far as DLF is concerned. They're actually looking to seek shareholder approval for creating charge on unit stakes. DLF seeks to create up to 7,500 crores worth of charge pledge on unit stakes. This, I believe, is coming out of the AGM. Some of these announcements coming out of the AGM is what I seem to be picking up from the exchanges as well. There's been a release that's been filed to the exchanges is where these details have been coming out of. But it's going to be interesting to see as to how the stock really pans out. Just pull up in the pre-open. It's trading a little soft as far as DLF is concerned, but there seem to be some bit of developments coming in out of the AGM as far as what we're tracking so far. Where they've actually seek the shareholder approval for creating charge on unit stakes is what we're seeing. Mayuresh, any thoughts here? The real estate pack probably isn't the best one, but DLF?
Good morning, Priyank. I think clearly I've always stayed away from the real estate pack for some length of time. I'll still continue to do so. I think we need to see balance sheet strength coming through, cash flows improve, which simply are not happening. Too much oversupply, leverage position simply too high. And again, I think I'll stay with my old favorites, the housing finance companies. So LIC housing is something that will still continue to prefer.
All right, fair enough. Mayuresh, just hold that thought. Let me just get the pre-open going. Hero Motors, the big stock to watch out for, starts a day higher with a 3% gain on the back of some strong earnings is what we've seen on that one. BPCLZ, all cheering, some bit of moves right now, but it's unable to break above convincingly about that 85-60 is what we're seeing on the opening level as well, is what we're seeing as far as the index is concerned, is what we've been tracking so far in regard to the way benchmarks panning out as far as the Nifty and the Sensex are concerned. So far, DLF seeing a little bit of a gain on open is what we're tracking as far as that index is concerned, as far as that stock is concerned, is what we've been seeing as far as that stock is concerned. ICICI Bank also among some of the other stocks that are actually gaining in trade. Nifty up 4 to 5 points higher is what we're seeing. So it's again pretty tentative ahead of the big policy decision that we're actually waiting out for. Bharti up nearly 1.4 will be reporting numbers today, so that one's seeing a decent gain. Among the losers, IndusInd, Kane, Bosch and Wipro seeing a little bit of a slow move up.
Okay, lots of mid-caps also on earnings. So McLeod, BGR, Indiabulls Real Estate, another one, Neil Kamal as well. PNB Gilts, JK Paper, all of these are moving on earnings. Wockhardt has recalled 5 million bottles of drugs from the US. That stock in focus on account of that, and that's why it's seeing a bit of a cut coming in right now. We'll also, of course, continue to focus on some of those rate sensitives ahead of the policy coming in too. Other stocks that are buzzing, it's interesting to mention Force Motors because now it's been buzzing a few days in a row. Tamil Nadu Newsprint is again an earnings impact stock that's buzzing today in trade from the small cap universe. We've also got a Torrent Power that's looking good, SR Oil. Some of the other mid-cap pharma names, Tara Global is up about 2%, earnings once again there, Britannia once again earnings impact. So a whole host of mid-caps that are seeing movements on that front. BEL again on Rohit's buy list, that stock's also looking good right now. Market breadth continues to be positive. Okay, Mayuresh, let's just come down to those rate sensitives and get a perspective from you on how things are really expected to shape up. Even if we take a look at some of those auto names, we've already seen quite a good run-up in some of those stocks. So even if, whether or not today, but even if down the line we had that rate cut coming in, how much of an impact do you really see of that going ahead on some of these stocks?
So clearly, I think it's a combination of two factors. A, I think the rate cut does play an important role when it comes to propping up demand. But clearly, I think how the monsoons pan out over the next couple of months will have a bearing on how the rural demand pans out. So clearly, I think if you look at the two-wheeler sales 40 to 50% of their revenue comes in from rural volume growth. And clearly, if there is some amount of contraction happening there, you're going to see some impact going through. You've already seen in the July quarter, Hero MotoCorp's numbers actually dropping 8%. So I think if it worsens off, you might have an implied effect. And again, I think the earnings might get estimated. Nothing taking away from Hero MotoCorp's numbers though. But again, I think we'll be extremely stock specific in these pack. They have run up quite significantly. And again, I think what we're liking current at the junction within the four-wheeler pack is something like a Maruti and Tata Motors, purely based on the valuations that it is deriving and the kind of beating that it has got, more to do with how the China story will unfold. Yes, I think it will cause pain over the next couple of quarters to say the least. But again, I think valuations looking extremely attractive for Tata Motors at this point.
All right, Tata Motors, strictly after that fall, has become one of the more preferred plays on the auto pack is what we've been seeing. But again, one needs to watch out for as to how the fundamental developments play out. Just want to highlight some of the other volume movers on open trade itself in regard to what we're seeing as far as some of the counters are concerned out here. India was real estate up 6%, HFCL seeing some good volumes, JK Tyre and JK Paper both seeing good volumes on open itself. KPIT, Tech again in focus is what we've been seeing. Manali Petro, some of the small caps that are getting active, and DP Realty up nearly 3%, and Suzlon up 0.5% is what we've been seeing on some of these counters. Mayuresh, in terms of some of the other themes to watch out for, you'll be looking for Bharti and Britannia in terms of earnings today. Any views on those counters?
So clearly, Priyank, if we look at Britannia, I think the valuation is simply too expensive at these levels, 35 times FY17 earnings. And yes, I think most of the positives that the stock has exhibited is getting reflected, in my opinion, in the stock price. ROEs have remained consistent between that 55-56% mark. ROCs have shown a significant traction close to the 54% mark. And though I think the cash position has improved significantly, the ad spends have still remained at elevated levels. So I think in view with competition, I think new launches expected to come through the non-dairy products, specifically the non-biscuit segment, expected to grow significantly. Cost optimization expected to prop up margins even further from the 10% that we've seen. So I think it is there in the price, but I think valuation is simply too expensive, too rich for Britannia at this point. So I'll wait for declines onto that counter. And again, look at numbers, how they come through. For Bharti specifically, I think mobile traffic growth is something that will drive the India business. Consistency, again, expected in terms of ARPUs, close to 199 to 200 odd rupees, expecting RPMs to stay in that range of 47.5 to 48 paise per minute. And again, the African business is the business which will be an overall drag for Bharti's numbers. We're expecting EBITDA from the African operations close to $200 million, and African EBITDA margins coming anywhere between 19.5%. So clearly, I think the consolidated margin should come close to 36 odd %, but with the kind of spectrum payments that Bharti has done, the return ratios will get impacted in the second half of this year. So clearly, numbers expected to be a little bit better. Data growth will be robust, specifically for the Indian operations as Bharti is concerned. But I think at 6.8, 6.9 times EV/EBITDA, I think it's fairly priced in my opinion.
In fact, markets now are just seeing a little bit of a cut down nearly 0.3%. So you can getting a sense that the markets going into the policy meet are going a little cautious now. Is what we seen. Yesterday turnover also was a little bit muted. Is what we were seeing in terms of the way the markets have been panning out. So again, you'll have to keep an eye on the way the volume pans out as well. Markets may be looking a little weak, but possibly post 11 or so, you'll have some clarity in terms of the near-term direction for this market. Kane India down 1.5%, Bank of Baroda, Tata Motors, ONGC, all slipping a little bit now in terms of trade today. Any thoughts on the banking pack, Mayuresh? We were talking about the way the policy meet could play out and what the expectations are, but the entire recap, some earnings, have really lifted the entire banking sector. What are you doing in the banking space right now? PSBs, private, anything looking favorable?
So clearly, I think the government move for recapitalization is a positive move for PSU banks, and they are in dire straits for capital in terms of their balance sheet expansion. But again, I think if you look at what they've probably done, they have consciously slowed down their credit growth and single-mindedly focused on recoveries, upgradations, and ensured that the gross NPAs do not spiral out of control. Having said that, I think if the capex cycle is elongated over the next few months, the working capital constraints will be very evident on the asset quality of a lot of these banks, because the kind of exposure they've got to iron and steel, infrastructure, real estate, sugar, I think that will still keep a toll in terms of how the restructured assets pan out. And the cash flows simply do not seem to come through for a lot of these PSU banks. So I think extremely stock specific when it comes to the PSU bank. State Bank is something that we've continued liking, we continue to like that. And again, I think the bias remains with the private sector guys. Yes, I think the numbers have not been great if I talk about expansion in terms of how NIMs and spreads have panned out, how credit growth has panned out. But we still remain optimistic on three counts. Capital adequacy remains extremely strong compared to the PSU counterparts. I think the return ratios have been exceptionally strong because of their non-interest income. And again, I think the kind of focus that they've got specifically in terms of their retail portfolio. And three, I think their branch network ensures that the return ratios would remain strong. And asset quality, again, I think much superior compared to the PSU guys. So I think optimistic on the private side and very, very specific on the public side.
Mayuresh, what's catching your eye from the mid-cap universe?
So few of these mid-cap cement stocks is something that I continue to like. Yes, I think the numbers have not been great at all. Not expecting great set of numbers to come through for the next couple of quarters, to say the least. Clearly, I think realizations not improving is impacting the top line for a lot of these companies. Volume growth not expanding as per expectations is also causing a little bit of a concern. But these headwinds will be offset by tailwinds, in my opinion. I think benign raw material prices, improving scenario over the next few months. Because again, I think our take is that once the demand starts picking up and post-monsoons, I think it will reflect better on the earnings profile of these companies will pan out. A lot of these companies will improve their utilization levels and in turn the return ratios as well. So yes, I think something like the JK Cement, JK Lakshmi Cement is something we continue to like. And it's something like an Inox Wind. I think this company posted a reasonable set of numbers in my opinion in Q1. And clearly I think it's one of the weakest quarters as far as the wind energy business is concerned. But the kind of capex plans that they're doing, our expectations in terms of top line growth, anywhere between 48 to 49% on a CAGR basis over the next 2 years, margins stabilizing between 7.5% to 18%, and again valuations remaining attractive. So I think something like an Inox Wind looks very, very interesting at this juncture.
Right, metal counters, Tata Steel in specific up nearly 1.2, Hindalco also recovering, Coal India has been seeing a little bit of gain as well. Somewhat of a trading rebound here, or you believe it's a little bit of a reversal in terms of what we're seeing on the metal space?
Clearly, Priyank, I think it's gone awfully wrong in terms of the commodity cycle actually taking a U-turn for a lot of these companies. And again, I think the Chinese demand-supply situation not expected to improve. The LME price is expected to stay benign. And though raw material prices have cooled down, I think the margin expansion will take time for a lot of these metal counters because there's a lot of inventory that remains on their book. For instance, Tata Steel, JSW Steel, they've still got high-cost iron ore inventory onto their books. So for a meaningful expansion to happen, if we assume that the other factors remain the same, will take time. Again, I think consciously a lot of these companies will reduce their capex. So something like a Vedanta, which was planning to expand its aluminium capacity to 2.3 MTPA, I think the capex there will go down. JSW Steel, I think that ambitious plans for the Vijayanagar plant and even few maintenance capex done for the Salem and Dolvi plant, I think that will get tapered down to a certain extent. And the valuations on an EV/EBITDA basis look extremely attractive. I think it will take some length of time for recovery to happen. So I think if investors have a time horizon of more than 2 years, I think it would make meaningful sense to accumulate these counters on declines. But again, I think from a short to medium term perspective, I think the pain will persist on their balance sheets.
All right, Mayuresh, fair enough. Thanks for getting us those updates in terms of the way market outlook's been panning out, what we're seeing in terms of cues as far as the market going forward is concerned. But there you go. That's the kind of indication that we're picking up in regard to cues on the benchmark level. It's all eyes now as far as policy is concerned. Ahead of that, markets have been taking it a little slow.
So I'm counting down to that really. Up next, we've got In Business. Do stay tuned.